All right. All right. I wanted to give you guys this video before we ended the night. So it took me about 4 years to find a strategy that worked for me for trading. I blew my account and had to start all over, and I would suggest what helped me. So I learned how to trade from a guy by the name of Sean Dekmar. It's spelled SEA, last name DEKMAR. And the other information I learned was from my father, which he taught me the about quality and ranges, which really got me to where I'm at now. So I learned a lot from Sean when it came to like how the market works, about shares, like quantity of shares, about averaging down, patterns. A lot of some things I don't use at all. I like that was one thing like learning from my father. He taught me how to simplify things, but I would say what I learned is like the dip buying method, but I didn't really maximize it out just because for me it was a little bit more on pattern driven than how I do it now, which is similar to what my dad does in a way, but a little bit different. So to give you guys kind of like analysis and how I trade, swing, or invest. And I do all three because it just depends on the scenario and what ends up happening in the market, what ends up my trade turning into. So to start off with the first um, step, I would say, is invest in quality stocks as in top 100 or top 500 companies. That was something I had to learn early. I wish I learned early on, and um, but it's also something that taught me the experience. I went with penny stocks, and most people say, "Why'd you invest in penny stocks?" Well, from Sean, he shows you how to do it, but he goes the opposite. He shorts the stocks, so that was why I didn't do as well, but I did make money. I did make money, but I lost money, and I ended up losing more than I won. So it wasn't that his strategies didn't work. It was more that his strategies work better for shorting, which usually you would want to do with penny stocks because they're companies that just are not up to par. So you want to be able to take advantage of that. So that didn't work so well for me in that sense, but when it comes to top 100 or top 500, these companies are the opposite of companies that are not so well off. So these companies are perfect for the strategy that I like to use to trading, which is dip buying, because these companies are eventually going to usually go up because they are top companies. They're top companies for a reason, and it's not because they're top companies because they go down. They're top companies because they go up and they make a lot of money for us and in the economy. And they're companies that we use, like Apple, Google, Amazon, Nvidia, Tesla, Microsoft, Meta. Like those are some of the stocks I like to trade. Some of them I kind of stick away from because they're just not my cup of tea, but those are companies that I would trade. Just today, Meta went up 12%. That was an opportunity. Most people would probably be like, well, Meta's gone up so much. Why would I trade that? Well, because it's proven to go on up. When you start to do more further research, you start finding out why companies are so good. And the Magnificent Seven is just, good enough company that does a lot. Do some research on it, you'll find out more information. So that's some of the companies I trade. Okay, now going into step two, look for stocks that are on sale. So I'm looking for Apple. Like this year, Apple's pulled back. Apple's a buying opportunity. I know a lot of people are saying it's overvalued and everything, but at the same time, it's continue to be overvalued because it's how many times has its stock split? Multiple times. I'm going to still look for opportunities to trade it if I can, or invest in it long term if it turns into that, or swing trading it for a minute. Like earnings today, stock went up to like $7. That's a great opportunity. $7 going up on a $200 stock is pretty good. It's not the greatest, but it's still pretty good. That's an opportunity. So we're gonna go to the next one, step 3. Oh, of course, I forgot. Step 2, don't chase. Plain and simple. If the stock goes up and it's going up, don't chase. Like, if you are gonna do anything and you feel like I don't want to miss out, you buy very, very little. That's it. So then you don't feel bad if the stock goes down, because you can always average in. That we'll get to that later. So step 3, once you find a stock that is down on sale or on sale in an industry that is booming. So what I focus on is focusing on tech companies. I don't really want to invest in banking companies. Like, if you look across the board, you just look at what are the bank's prices, like for Bank of America, or you look for what is the price of, unless you're doing tech inside those, then I would say those are pretty good. But for the most part, where you had the dot-com bubble, and that was like all these companies blowing up, we're in the AI bubble, I believe. So focus on the future, which is AI. AI is going to be everywhere. It's going to be in the medical field. It's going to be in our transportation. It's going to be in our banking. It's in our finance. It's going to be in our daily lives, like it already is with searching. It's going to be everywhere. So focus on the future when it comes to investing. Things that are going to be booming for the future that you can be able to make the most out of your investments. So next, 4, study the range of the stock. So once you get the stock, start looking at the range. That's like one of the first things I do once I find a stock that I like. First, I'm looking, okay, is it on sale? All these things. And then next, I'm looking for a range. I'm looking at how much does the stock move in a day? Does it move $3-4 up and $2 down? I'm looking at an average range. So if an average, the stock moves $3 down and $4 up, or the opposite, vice versa, but I know more than likely we're going to have about a $7 move, either up or down, or a combination of the two. That's what I'm looking at to see the volatility, and is this going to be able to make me between $1 to 50 cents per share. That's what I'm looking for, $1 to 50 cents. And if it's like a different type of market, maybe if it's like a down market, maybe 25 cents, because then I want to take less risk. So I'm looking in an up market, $1 or more, like it can go $6-7. Just, let it run, sell a little bit, let it keep running, or just keep on holding if it's in the up market, a bull market, which means, we're in green season, Christmas time. Or like kind of this month, majority of the year we had kind of a down time. I would have probably been doing 25 cents on per share trading, taking less risk. So now going into the average in method, to recognize, we're going to go average in method, which is we're going to buy a little in the beginning, and we're going to wait for an opportunity. So if it's trading in a channel, means like the stock is going down to support and down and up to resistance. Meaning if you make a line and it touches in multiple spots on a candlestick graph, so that's the type of style I use. You can always look up on a video on support and resistance and learn about it from Sean Deckmar, who is, I would say a great teacher. So check out his support and resistance video on it. And if it is trading in that channel, you want to just maximize on the downs. So going into downs on here, you can see in this chart, that circle, that is a down. But if you look, there's little spots in here where there's other downs. So you could buy at the bottom of that first part of the graph where you see it all the way down. And then sell at the top of either the second top or the first top, and then buy back in on that dip. Sell again as it goes up. Buy again on that dip. Every time it dips down, you want to buy. And usually I do all my support and resistance lines horizontal. I hardly ever use a diagonal support line. I just don't think it works very well. I usually like to use horizontal lines for all my charting when it comes to support and resistance. It's just a better way and method that I see that is more accurate. We'll get into that. So averaging in, you're buying a little. So on on that big first line, I would probably buy maybe say 3,000, a small amount of shares, very small. Something that would just make me money for the day. If it goes up a little bit in the beginning, and I sell off, and then I still have multiple opportunities with my other cash that's free. So say if it goes down more, then I'm waiting to let it run. We want to let it run, especially if the stock has ran up. If the stock has been running up, we got to let it run down and let it consolidate. Let it kind of find a way to kind of, okay, what are we doing? But like I said, if the stock's on sale, there's higher chances that for it to go up in a top 100 company or a top 500 company if it is already on sale. So I'm basically getting everything put into a way to where you have a high chance of making money because all these categories are already being met. So when you get to this point, it's really just waiting for it to go down. Waiting for it to go down. We don't want to buy as it's going up. Only time we ever do that is very, very little in. That's the only time. Very, very little in. Every time should be focused on seeing that graph go down first. All right? So it's all about the buying at the right time, price target, and not panic buy. Not panic buy. So next is using the fear and greed index. If you just type this in on Google or on the internet, you'll see a chart that lets you know when we're in greed season, that's when the market's going up. When we're in like severe greed, that's when the market's like booming. When we start to get to fear, that's season for us for dip buying. When the market's super down, you have high chances of doubling your money. These are the opportunities we want to have money put away to be able to buy. So right now, the market's kind of been in greed a little bit right now, but it's slowly getting pulled back. So we want to look for those opportunities to kind of, okay, the market's going to start pulling back. Let's play it safe. If we are going to do any trades, 25-cent moves or just waiting on for the right time. Swing it. Just let it go down and then swing it. So that's the market psychology. Looking at the market when it's just like a tossing and churning of waves. It's going to go at one point up, and then it's going to be at one point going down. And then there's going to be the little, channel, and that's where we use our support and resistance. Okay? If you ever get stuck in a stock, when it turns, this is when it's going to turn into an investment. Okay? So if you ever get stuck and you know it's a good company and it's down big, it's okay to hold, especially if you're continuing to build up cash to invest and the stock is coming up. Like, I'll give you an example, like Marvell right now I'm invested in. The stock I'm okay with being in because I know eventually it's going to pull up, and I'm okay with what it's going to do with making the money that it's going to make. During the time, like, say if it were to get some horrible news, of course, if something were to happen, the company's worth $60 billion. It would have to take some serious things to happen for the company just to kind of crap show and everyone's selling. You know what I mean? This is the way I've done for myself and done well. And you could see at the bottom of the chart, I'm at a gain-loss ratio of 99%. I've been doing really well trading. I'm at an 85% win rate, and I've learned to do a lot better with my trading and my investing. So I hope to keep on crushing it and keep on investing and being okay with staying in good companies. This company that I just spoke of, Marvell, is in the growth fund for Charles Schwab. So it is a good company. If they're invested in it and they're, a very well-known company themselves, Charles Schwab, why not me? If I already buy, an index fund or, so I'm a big fan of index funds, and I'm a big fan of some individual stocks that are good companies within those index funds. So, like I always say, happy trading. Hope you guys have some good trades on Friday. And thanks for watching the video.